Traders, happy Sunday. This is Sage FT with your Rev-Up and review and Rev-Up. We can put it any way we want it because it's ours. Let's go. Let's dive right into this. Let's take a look at last week in the larger time frames. I've been studying this for a little while here now, looking between the daily chart and the 4-hour chart. Now, we need to zoom out. We need to think about this here. This is important because we need context, right? Ooh. There are investors waiting on the sidelines for a big move down. It doesn't mean they're bearish. It means that they need contraction to find value. If we step away from thinking about this as a chart that I'm going to trade stocks upon and just think about it as normal human interaction, life, whatever, right? It has to ebb and flow. I personally, myself, have money in my IRA ready to go when we get lower. Who knows what lower is? We're going to find out. So if I have money in my account waiting to deploy, I know that other people do too. Now, does it go down? We don't know. First, let's review this bad boy, and then we'll rev it up for next week. So the first thing that we want to point out and we want to look at is the daily chart. So if we zoom in, behind all this chicken scratch, right? Just look at the 200 simple moving average, which is red here, and the 20 period simple moving average, which is blue here. What you're going to see is price is below the 20 that's sloping down, but both of them are above the upward sloping 200. So we are in what's called the chop zone. This tells us no longs until it flips back around to this. So how do we play that if we're a 2-minute chart trader? I'm glad you asked. That's going to be the topic of the review for the week. Okay, so we're bullish, bullish, bullish. Oh, we can finally get a two-step pattern lower, right into lower Keltner on the daily chart. Now, does that mean that it's full-blown boar? No. It just means that there was a higher probability of it moving upwards if we hit lower Keltner, which it did coming into last Friday. Now, coming into this last week's Monday, so 2 Fridays ago, coming into this week's Monday, it was kind of a, I'm going to wait and find out. But we defined that 54.8250 is the over-under for the entire week when we came in on Monday. Right now, let's zoom into this, and then we'll dive down into the 4-hour chart, and we'll take a look at, well, what were we really doing? This is a really, really good review. So I hope all of my traders that are really looking to succeed are really paying attention to what we got going on here. This is really important because we're going to show where they grabbed the liquidity, where they just gave it to them, right? Okay. So we are looking at this level here, bink, almost to the tick. Here, they get the push above the close of the 2 Thursdays ago. Stall out. Watch this. Watch. Bink, almost to the tick of this right here. So now the bulls are feeling kind of froggy, if you know what I mean. So we get a gap lower, and it just absolutely bullish engulf outside bar. Now they're really feeling froggy. So everybody starts feeling their oats, right? And they put this big old low to low in there, and they go, here it comes. Here's the target, right? They being me. I didn't have any swing positions on, nonetheless. And so it comes all the way up to here, almost, and just fails. The high of that was 5,600 even. So now, what was the expectation as we came up into 5,600? Now, let me show you. Look at the opening of this big red bar. Open, 55.85. Now, why is the open of the big red bar significant? Okay, because this is where they removed the liquidity from the bounce off of an all-time high after all-time high after all-time high after all-time high. So they remove liquidity. They try to bring liquidity back in. Failure to launch. Swoosh. Removal of liquidity. Okay, so now that they've removed liquidity, meaning they've pulled the bid. Okay, those of you that are going to watch this video, you are absolutely about to get a nugget. Here's the nugget. Okay, there's 2 ways to remove liquidity. One, let's say we're talking about liquidity on the bid, right? One, you pull the bid. The second way that you can remove liquidity from the bid is to sell to the bid. So that's what this looks like. That's why it moves so much. Not only are there people hitting the bid, they're removing the bid. They're decreasing their bid or removing it. The thought is, oh, well, if there's so many people that want to sell to me at 81, I'm just making these numbers up, I think I can get 79. Removal of liquidity at that level. Oh, they really wanted at 79. Okay. I think I can get 74. Oh, do you see the pattern? Okay, so follow me here. This is why I keep, when we're moving up and down through, even on the 2-minute chart, 15-minute chart, you're seeing me say, okay, well, the top of this bar, the open of this bar is the over under. That's why it's so important. This plays into red overtakes green. Green overtakes red. I'm explaining why it happens. If you're watching this video tomorrow morning, I want you to tell me that you saw the Easter egg in the Sunday night video. I'm not going to hint it to anyone. I want you to just type it into the chat, okay? This is real knowledge right here, right? Let's carry on. I haven't even gotten into how we traded the week. This editor, this might be a longer video. I apologize in advance, but I'm not sorry. Here we go. Look at what happened when we, on the daily chart, came up, tried to bring the liquidity back into the market, meaning they're going to bid and buy it, right? So if they're bidding and buy it on market, hitting the offer, what do you think they're doing to the offer? Removing the liquidity on the offer. Removing the liquidity works both ways. If somebody is buy, they're hitting the market button to purchase on the offer. The guy that goes, hey, I was selling it at 81. Wow, a lot of people want my widget at 81. I think I can get 85 for my widget. Bloop. So not only is the person that's purchasing it at 81 removing the liquidity, the guy that has liquidity goes, well, thanks. Boop. I'll take 85, please. Changes his little sign in front of his widget and says 85. And people go, oh, I'll take it. Okay. That's how we have to think about this. Don't think about this as some sort of magical unicorn fart that you get to tell your friends how cool it is that you trade. Okay? No. Just tell them you're a drug dealer or a brain surgeon or something, right? Or tell them you went back to university, something, anything other than tell them you're a trader, right? Because remember what they do. Oh, I trade. Oh, what do you trade? Well, I trade the S&P. Well, it's futures. Well, huh? Their eyes already glazed over. Don't worry about it. Okay, now let's get back to it, because this all plays into green overtakes red, red overtakes green. Think about people's eyes glazing over, right? Well, then that's where the algorithms come in and take people out. Here's what I mean. They had a big green bar, see, a gap green. This is the over under. Do you remember the narrative that I was speaking of? That was Thursday, right? Yeah, on Thursday. Oh, all right, here we go. 56.05, here we come. Can we hit the hard? Right. And then when it broke 55.85, folks, the narrative changed. See, now we're getting into, well, why was he talking about all that other stuff? Because now the narrative changed, right? And now the longs had to prove the case. The buy to open at these levels had to prove the case. The supply, meaning the people that are selling, doesn't matter if they're selling to open or sell to close, it doesn't matter. The supply was starting to control the market, right? And so then that's when everything started to flip around. All right, so now that we've got the daily chart out of the way, finally, just on the review side of this here, let's go to the 4-hour chart. Okay, so now the 4-hour chart turns absolute south right here. Now, what I mean by this is again, don't look at all the chicken scratch, okay? Relax your eyes to see the sailboat, man. The sailboat lies between here and here. Okay, this is down below it. This is still uprising. Look, still moving upwards. Boom, not moving upwards anymore. All right, so now when was this? Oh, August 1st at 10 a.m., the 10 a.m. bar. It was a disaster. So therefore, now we're in position 1 on the 4-hour chart for the first time in a very, very, very long time to the downside. All right, so now good. So how did we play it on the 15-minute? Once the 15-minute KISS chart went all the way back into position 1 to the downside, it was all over but the crying. Well, we just happen to have what that looks like. Good. All over but the crying. Once we moved into position 1, ladies and gentlemen, it was all over but the crying. It was nothing but selling for 2 solid days. 2 solid days of relentless selling. And so anytime we got a rally, which would have been counter trend. All we did was wait for it to go back into position 1 on our 2-minute chart, and we were able to execute. Okay, now that we've gotten that out of the way, what can we expect next? Let's go back to the larger time frame. Let's look at there's a couple levels I have drawn out on the 4-hour chart, and it goes right along with, well, the liquidity. And we want to look at liquidity pockets or lack of liquidity pockets on larger time frames, because we want to know where do they pull the liquidity and why, and what happens if they revisit. All right, so now the first one that I see is down here at 52.42. Does that number sound familiar? Let's dive into why I look at these levels down here. Now, look, we could plot all these out for 100 points lower, 200 points, 300, 400, 500 points lower, and it can go right back up to 57.64. I'm just making numbers up, right? We don't know, but we have to plan. So if we were to start sliding again, okay, these liquidity pockets here, they have to get filled back in. Somebody pulled the offer while they were purchasing. Okay, now, do they stick it to that person or not? That's the numbers that we're looking at on the downside, right? We would have like 51.63, 51.90. Those are way down there, okay? Way down there. Now, the demand zones are the pullbacks, prior swing high, prior swing low. All right, 52.70, okay? 52.70. That's now people were saying, no, there's no way we go to 53.50 when we were at 55. Well, here we are. So now all the people that are thinking that the market's going to crash and they lose every single time, right? Like most of Twitter. Okay. Do they really start chirping and the algos buy? So if the algos start to buy, what do? Well, we're watching this first band here. We're watching this area here, because that was absolutely where they removed liquidity. Think about it. They find out that they can get it at a cheaper price, so they just pull the bid. Okay. And while people are panicking or hitting the bid. The other thing that we'd watch for on the 4-hour chart is this high to high trend line. Now, we're probably thinking, well, that's a really far way apart. It can't really go. Look what it did. It can do that tomorrow, Tuesday. All right. What we're going to do is we're going to wait for our pattern to repeat on our time frames, on our charts. We trade the 2-minute chart, 2-minute kiss chart, 2-minute candlesticks with the 15-minute kiss chart. That's all we need to know. Once those move in our direction with initial movement, that's when we're going to execute. All right. So in review and looking for next week, we let the trades come to us, period. We don't go out looking for trades. We let our trade come to us, because we have the data that shows that when we execute, we win more than we lose. We trade in probability and protection. And with that, folks, I'll see you tomorrow morning in the live trading desk, 8 a.m. Eastern time on YouTube.